Can you make a lot of money buying deep in the money calls? Absolutely, you can. I'm going to show you how you can, and I'm also going to show you the cons of what could go wrong if you don't do it right now. This can be life-altering sums of money if you do it correctly, but it can also hurt you if you do it the wrong way. All right. Now let's jump into it. I'm going to show you an example here, and we're going to look at Amazon as a sample company. Okay. So let's take a look at Amazon, and here we go. Okay, Amazon. Now, first of all, what is a deep in the money call? So we have to find what is a call? Well, a call gives the buyer of that call the right, but not the obligation to buy a stock for a certain price for a certain period of time. So again, you have the right, but not the obligation to buy a stock for a certain period of time for a certain price. Okay. So why do we pick Amazon Web Services here? I'm sorry, excuse me, Amazon. I kind of gave it away there. Why do we pick Amazon? Well, the reason we picked Amazon is we want to look at a stock that we think will be worth a lot more in the future. Now, whenever you're investing in companies, that's the backbone of every successful investment strategy. You want to find out what's going up. The whole thing is buy low, sell high. That's the idea. We want to get this thing higher and sell when it gets higher, and we want to know what that exit point would be. Now, how do we do that? Well, a lot of it is observation. You kind of see what's going on in the world. You can see what's happening. Amazon controls a lot of big businesses, and they're getting bigger and bigger and bigger. But that's very top level. I want to get focused a bit more on the nitty gritty. Now, Amazon is a company that we think will be worth a lot more in the future, and you have to do your homework. Now, here at Theta, we do our homework, and we're going to be introducing a 14-day trial soon where you can see our homework. But the idea is to agree or disagree with our thesis. We'll show you what our price target is a year from now, 2 years from now, 3 years from now, 4 years from now. And that way you can say, hey, I agree with these guys. Or, you know what, I think they might be a little bit off here. That's your opinion, but the idea is we are transparent. We will show you our homework. Now, what I'm using here is I'm using Yahoo Finance to pull up this data. As you can see here, the first thing we want to take a look at is we want to take a look at a 5-year chart here in Amazon. Where was this thing 5 years ago? Well, 5 years ago, this thing was at $160 a share. Now we're at $259 a share. Okay, you can see right here. So it's gone up, but it hasn't quite doubled. That's 5 years. Okay, so you got a 60.49% return in 5 years. Now, the stock market can do all kinds of weird and crazy things in the short run. Things can affect it like inflation, wars, interest rates, viruses, all kinds of things can affect the stock market in the short term. So nobody but nobody. A famous line goes, I don't care if you're Warren Buffett or Jimmy Buffett. Nobody knows if a stock is going to go up, down, sideways, or in circles. But that's very true in the short run. That's a line from Wolf of Wall Street for anyone who caught on to that. So let's take a look here and let's take a look at what is ultimately going to drive our stock price higher, right? We want to take a look at. Well, we hit the financials tab here on the left-hand side. And the first thing that we want to take a look at is Amazon making more money, more revenue every year? Well, yeah, it looks like it. This data is all here. If I look at the top line, it says your total revenue in 2022 is about 513 billion. 2024, sorry, 2023, 574 billion. 2024, 637 billion. 716 billion at the end of 2025 for the year 2025. So this is clearly shows you a nice trend upwards in revenue. Now, just because you're making more revenue doesn't necessarily mean you're making more money, but we're going to scroll down here to the diluted EPS. That is diluted, meaning if all warrants, exercise, everything was all stock options, like let's say, for example, executive stock options were all exercised. How much earnings, dollars, do they have per share outstanding? We want to make sure this trend is definitely heading in the right direction. At the end, for the year 2022, they actually lost a little bit of money. 2023, they made 290. And if I fast forward here, 2025, $7.17. But our thesis is twofold. Okay. Now, Amazon does a lot of things, but what we're really going to be focusing on is two things. First of all, well, what do we know Amazon for? You go on your phone, you order a bunch of stuff, some bags of hammers and nails and bananas, and it bam, it's in your door in the morning, right? That's what it's known for. It's amazing. You can buy anything, and if you have Amazon Prime, it's there right away the next day, right? Okay. What what makes those warehouses run? A lot of people. Now they've automated a lot of it, but what's going to wind up happening, in our opinion, is a lot more of this business is going to be automated over the next number of years. Meaning, there'll be a lot more robots replacing human jobs in those warehouses. It's going to happen faster and faster and faster. And eventually, I think there won't be too many humans left in those warehouses. Okay. Now, that's not necessarily a bad thing because human beings are always going to find other things to do. I'll give you a time example. If you go back in time, none of us were around for it. But when the horse and buggy was replaced by the vehicle, by the car, right? What happened to the blacksmith, the person who picked up the poop, the person who provided the oats for the horse? All lost their jobs, but they found other things to do. The same thing will happen this time. If I go back a little bit closer in time, you used to press zero on your phone, you'd get an operator. An operator would put you forward to another number. All the operators are gone, obviously. These technology progresses, but human beings will find other more value added items or things to do. The same thing we think will happen this time, okay? Now, how fast it happens and how much it affects society, we don't know yet, but artificial intelligence is going to change many, many aspects of our lives forever, just the same way the internet has, okay? Or maybe even more. We'll see. Let's see how things play out. But our bottom line thesis is we think a lot of Amazon warehouse workers globally, and they employ hundreds of thousands of people globally. We think that they can reduce the number of workers they have. Now, it doesn't cost much to run a robot. It costs a lot of money to employ people. So what does that mean? Amazon continues to make more and more money every year. Like they sell more and more stuff. The revenue keeps going up. But what's going to happen now? Their expenses are going to start actually declining. So that means their profitability is going to explode. And that's where we think is what we think is going to happen. Now, if we look at here, just the cost of revenue, you can see here, the cost of revenue in 2022 was 288 billion. So it increased, but it didn't increase anywhere near as a percentage as much as the revenue did. That means they're becoming more efficient and their margins are increasing. Now we think that number is going to get even wider. Revenue will continue to go up at a higher pace, and the cost of the revenue won't go up anywhere near as much. Now, it probably won't go down because there'll be other things for human beings to do, like I said, but we don't think it'll go up anywhere near as much as the revenue will. That means profitability is probably going to explode. Now, that's the first reason. The second reason is something called Amazon Web Services. And the whole theme here is artificial intelligence, okay? So Amazon Web Services is the number one provider of global cloud storage / infrastructure. Now, what is cloud storage infrastructure? Well, cloud storage is where all the data is held in order to train this artificial intelligence. So if you want to train a robot in the Amazon factory to do human-like tasks, well, it has to be taught human-like tasks. That data has to be stored somewhere. And then that data has to be processed. The processors that they use for this is like mostly NVIDIA and AMD. AMD and NVIDIA processors then train. They provide the compute. The compute is stored and it trains it to act and do and behave as such. Now, for those of you who use ChatGPT, and I use it all the time, I used it actually just before this, I use it all the time. And what it does, I just pull up some data here on calls and puts and some YouTube videos and stuff like that. What it does is it takes my data and it trains ChatGPT to answer back to human beings. What do I do here? What do I answer? This data is training it. Now that data is going to be stored somewhere. So there's two areas of explosive growth for Amazon. One, human beings replaced by robots, and not like the robots we have. I'm talking about the robots with artificial intelligence brains. So that can happen at a much faster clip. And secondly, cloud storage. Cloud storage, there are three main providers, like I said, globally. Amazon Web Services controls about 30% of the global market share. Microsoft controls about 21% with Azure. And number three is Google. They control about 13%. So these three companies make up 2/3 of the global cloud storage / infrastructure category. Okay. So we're in a really good spot here with Amazon, in our opinion. Okay. So we want to own more shares. Now what we've done our homework. And again, I'm being very simple with the homework. You have to do a lot more homework than that, but I'm being very simple. But we've done our homework. Okay. Now we want to go to the options tab. And I'm going to pull up my calculator here, and so we can do some numbers here and see what the difference in returns could possibly be. Okay, so when we're looking at buying a call here, so the calls are listed here under options, we want to give ourselves at least a couple years for our thesis to play out. So I'm going to go here roughly 2 years out to June 16th, 2028. I want to buy a deep in the money call, okay? Now, when this is at the money where the blue line and the uh, uh, white line separate, what is at the money and in the money? Well, if the stock's trading for $259, okay? Actually, no, the line is wrong. So if the stock's trading at 259, anything below $259.34 is considered in the money. And anything above 259.34 is considered out of the money if we're looking at a call. Okay. So what we want to do here is let's say we have $100,000. Okay. So we have $100,000 and we want to buy some shares of Amazon. How many shares can we buy? Well, we can buy $385, 385 shares. Okay. Now, if we can buy 385 shares of Amazon, well, great. Let's go ahead and buy 385 shares of Amazon. Okay. Uh, if we want to buy 385 shares, and our thesis is that we think it'll be worth how much in a few years from now? Well, we think it'll be worth, let me put my calculator back up there. I don't know what happened. The calculator seemed to disappear there for a second. Uh, we want to buy as many shares as we can. Now, we think this will be worth $500 a share. Now, you have to do that homework ahead of time. So now $385 times $500 a share. Well, there we go. Our 100,000 turned into 192,000. So what is that a return of? That is a return of 92.79%. Very nice return. Okay. Now, what if we were to buy a deep in the money call instead? So it's currently trading, like I said, it's currently trading at $259.34. So what we're going to do here, and we're going to use the same example where um, we think it's going to be going to $500 a share. Okay. Now it could go less, it could go more. Let me just see if I can change this around here and change a couple dates to show you guys that you can change the dates as you wish. Okay. So we can go to this date here. We can go to December. We can go whenever we like. Okay. We can go whatever you think. So, like I said, the longer you go for, the better it is. And the reason why is because you're paying something called theta. Okay, that is the time you're buying time essentially. So for your thesis to play out, if you think it's going from 259 to $500, well, you're going to have to pay for the privilege of having that control of the stock for that 2.5 year period of time. Okay, so we want to take a look at what can we buy this thing at. Now let's take a look at again June 16th, 2028. Now it seems to have fixed itself. Maybe there's a little glitch in the system here. So what we're going to do is we're going to buy some 150 calls. I'm going to do this again, by the way, so we can go over this because the numbers seem to be a little bit off here. So 150 calls, okay? So again, the same number holds true. I'm going to make a 92% return if I were to just buy it and it goes to $500 a share. Okay. But now what I'm going to do is I'm going to agree to buy it at 150. Now, why wouldn't I buy it for 150? It was trading at 259, so it makes complete sense. So how many shares can I buy with $100,000? Okay, divided by $150 a share. Now I can buy $666. Now, when you're doing options or buying options, unfortunately, you have to buy in 100 lot increments. That's called one contract. But I'm just going to show you for the sake of simplicity, if we were able to buy 666 shares, that's a very ominous number, by the way, so maybe we'll change that around a bit. Uh, but we're just doing math here, okay? Now, if the thing does go to $500 a share, and I paid 150 for the control of these calls, well, I'm at 350 times 666. Well, I'm at $233,100 divided by 100,000. And you can see I made a much bigger return. Now, this is a much easier way for you to leverage. So you can own a lot more shares with a lot less money. Okay. Now, the further I go into the deep money calls, I can do it for any price I want. Now, the closer I go to this price here, the more dramatic the change would be. Okay. So if I were to buy 100,000 shares, I'm going to use 250 as an example, but it's not deep in the money. Actually, let's just do 200. 200's it's fairly deep in the money. Okay. So we're going to buy some 200 calls here. And again, if I were to buy 100,000 divided by $200 a share, I'd be able to control, oh, so I'm times 10. I only put 10,000 there. 500 shares. Okay. Now 500 shares goes to $500. Well, I'm at 250,000. But if I simply just bought, okay, 200 shares, sorry, 259, we still know that return is 259.34, or sorry, 100,000 divided by 259.34. Our return, we'd have 385 shares, 385 shares times 500, and we'd have $192,000 divided by $100,000, and it's a 92.7% return. Now, if we were to buy the 200 calls instead, we are paying, okay, I want to show you how this works. We're paying $200 plus we are paying $93.54. So essentially, we're paying $293.54. Now, if I minus that from the stock price, 259.42, that means we're paying $34.12 a share for that time privileged. We are paying something called theta. The reason we sell options here at Theta is because we want to collect that time. But in situations like this, sometimes it's advantageous to actually buy it. So what you're doing is you're paying $34.12, but you're getting control of these shares. You're able to control more of these shares for 2 years. Okay? For 2 years. Now, let's say our thesis does play out. Okay? And it goes to 500. First of all, let's take a look at $100,000 divided by $200. Okay, 500. Okay, so we paid 293.54. So 500 minus 293.54, 206. Okay, 206. But how many shares will we be able to buy? Right, a lot more. So what we want to do is we want to take a look at getting this number as high as possible. So if it goes to $500 a share, and we are paying $93.54. Okay, so I'm gonna take this number here and bear with me while I do this. Now we have our $100,000. Okay, and we're gonna divide it by $93.54 because that's how many share. This is how many shares we'll be able to buy. So now we can buy $1,069 a share. 1,069. Okay, that's a lot of shares that we can control with a lot less money. Agreed? Okay, so now that we can control that many shares, and let's say it does go to 500. Well, if it goes to 500 and we agree to buy it for 200, our profit on that is $300 a share. So the return on that, as you can see here, is substantially higher. It is, you're basically, it's not really 320, it's 220%. 220%, okay? So I'm going to do that math one more time, okay? We have $100,000 and we're going to divide it by $93.54. That's how much it's going to cost us to control 100 shares, one share of Amazon at $200, okay? So we're able to control 1,069 shares, okay? A lot of shares. Okay. Now, if it does go to 500, our profit is the difference between 500 and 200 because each of this $93.54 will be worth $300, okay? So times 300. So we're at $320,000 as opposed to the $192,000 that we would have had we just bought the stock. So what a deep in the money call does is it allows you to control a lot more shares than you may have money for. Now, what is the downside here? Now, this can, again, if you really believe in a company, you can make a killing doing this. Absolute killing doing this. It can be life altering. So you have to make sure two things have to go right. One is that you have to get the right direction. And it has to go to your price or at least past your break-even point. Now, what is our break-even point? Our break-even point here is 200 plus $93.54. So as long as it goes above $293.54 between now and June of 2028, yeah, we're fine. At least we broke even, right? We didn't lose money. We are paying a bit of a privilege, like $34 for the right, that 2-year right, okay, to be able to buy these shares at 200. Now, I know it's a little bit complicated to understand. I hope I'm doing a good job. But again, if you have any questions, please put them in the chat, in the comment section. I will respond to them personally. It's a difficult thing to understand. And if you want to try this on a paper trading account, which is a fake account. Real trades, just fake money. Okay, so you kind of get the hang of it. Okay, so again, if it goes to 500 and we have 1,069 shares, Oops, sorry. Sorry. Let's do that math again. 100,000, okay, divided by $93.54. 1,069 times $300 a share, which is our profit, 320. Now, if this thing happens to go to 600 or 700, and that's possible, it can happen. So if you had done this on a company, I'll give you an example of one that happened like recently, okay? Let's take a look at a company like Micron, okay? Anyone familiar with Micron here? It's almost $1 trillion company, which would be the 14th largest company in the world. Look at where this thing was a year ago. Okay, so right now it's at $698.74. A year ago it was at $98. So had you bought a $50 deep in the money call, you would have made enough money to retire off of. Okay, so it can help your return substantially, but where can it go wrong? Well, let's go back to that Amazon example. If we are wrong, okay, so what you're doing essentially is, remember, what you're doing is, instead of being able to buy a few hundred shares in the situation, I think we looked at it was like 300 some odd shares. We were able to buy 1,069 shares with the same $100,000. But if it goes down, you're going to get absolutely annihilated. Okay. And that's what the biggest problem is. So if you have $1,069 and it goes down, I'm going to just go back to this options page here. Let's take a look here. All strikes. Yep. Let me refresh this here. So if it goes down, what happens to us? Well, we're in pretty big trouble here, right? Let's say we're totally wrong and something happens. It's a huge virus in the world and things absolutely go the other direction. Things that we weren't anticipating. And this thing goes down to 100, so call it $200. Well, we have the right to buy it for 200 bucks. That's it. Why would we buy it for 200? We can buy it in the open market for 200. But guess what happens to 100,000? Completely gone. Wiped. Okay? You are completely wiped. You've lost everything, right? Because all the money that you put into it, okay? Remember, we put in $93.54. And now it just gives us the right to buy it for 200. Well, we can buy it for 200 anyways. So all that money we put in, that $93.54, there's a certain component that which is intrinsic value and a certain component that which is theta or time value, okay? And how do you figure that out? Well, like I said, you take the amount 259.34, okay? Sorry, 293.54, and you minus it by the stock price, and that'll give you your theta or time value, okay? So if it goes below 200, we're done. We lose everything, okay? Now, if you want to be safer and you're like, hey, you know what? I'll buy this thing for 150. Well, 150 would happen to be your break-even point. But since you're paying $138 a share now, you won't get to buy 1,069 shares. It'll be less, okay? So those guys are the pros and cons of buying a deep in the money call. If you have any questions whatsoever, hit us up. We'd be happy to answer you. And if you want to look at what we do here at Theta, hit us up at thetatradingco.com. And my name is Omar. We'll see you soon.